Good morning back. How you doing, Fabio and everybody? Wow, this market just can't make up its mind. So I guess we're just gonna have to sit here again another day and play the range as best we can. So we got that sell signal a couple of weeks ago, and market is still correcting. It survived the next down move. That's bullish. And this gap down was bought. So just looking at this bar by bar, one of the things that I do when charts get confusing, which leads to me getting confused as to direction, since I'm just following the chart, is to visualize this on a closing basis, which helps a little bit. So, if you can look at this and just looked at a line coming down, then it stopped on the 200 thereabouts, and it went up. And now it's just going sideways, kind of blip down. And, you could view this as a downside shakeout, bottoming tail, 180 reversal, right? As we give different names to candlesticks. In any event, it tells us that the buyers were lurking below, but they just can't get it going. And so every time they come up to this 3100, 3160 level, the sellers come in and knock it back down, but they can't really do any significant damage. And so prices are coming back up again. And, we've got this, well, you can see the trading range up at the top here on the hourly chart. And so now as it's coming back up, and this is one of the reasons, critical reason, you need to look at multiple time frames. And one of the reasons why traders that are trading from very small time frames, especially going down to 1 and 2 minute, they will get caught up in something like looks like this. So this is a 5-minute chart. And you could imagine how it accentuates the perception going to a smaller time frame, because this looks like, wow, it's a rocket ship going up here. Meanwhile, it's in a downtrend on the hourly and coming up to an area of minor resistance where sellers are going to knock it on the head. And so it's something to keep in mind. And, within this downward move that's violated support, this hourly that was up, well, look at the daily chart and say, well, there's really nothing going on there. It's just chopping sideways. So as we look at all of this, it leads you to a correct bias of not getting too bullish or too bearish, and realizing that the markets are indecisive here and they really just don't know what to do, trying to figure it out. Is the country opening up, or these additional coronavirus things, cases that are coming up, are they just because they're doing more testing? Is it all just a bunch of BS? What's going on? Is the next shoe going to drop and the market goes down? So all of this news, this stuff that's going on, things are going to be okay in China. We got presidential blah, blah, blah. Is Biden coming out of the bunker and going to win the election? You got it. So point is, as we look at the charts, we just see that there's indecision here, and there's things are just chopping around here. So SPX levels, right? Today is Wednesday. Today is also MT Live at 12 o'clock. So assuming that sellers are going to do the exact same thing today, bear call spreads above 3160, and let's just call it below the shakeout low. What did it do in my line? I was supposed to make a duplicate. I probably pressed the wrong button. Below, let's call it 30, give or take. Below 30.30, bull put spreads. Okay. So SPX won't relate to those levels, but as you look at the charts, duplicate that. We shall drag it up there. And so we've got the trading range, and well, this doesn't tell me where it's at. Anyway, up above 3160, down here, down below 3080. Then we obviously just look at the premiums and see how far away we can get into what is the perceived safety zone. So up at the top of the range here, sellers are going to be there. That's why we shorted yesterday afternoon. The S&Ps up here, and the Qs were also, well, they just started to roll over. So it was more of a climactic kind of a rollover there. But, you know, the factory work is to look for, you know, things like this. Trading range up at the top of the range. Let's go down to the smaller time frames and look for some type of breakout failure, some kind of M top to give us short setups. You know, just simply looking to the left and, hey, there's going to be sellers up here as this would come down into the gap fill, which it couldn't get all the way down there yesterday. All the way down there, there's going to be buyers. And so then we switch over to the smaller time frame and look for bottoming patterns. And Qs. Inside day, indecision, same hourly chart, lower highs, lower lows, broke through major support, coming up to where the sellers are going to be. Well, thank you, Germano. Tell people in the green room. All right, so look at the Qs, YM, same slop, same base chart, not as bullish as the ES or spiders, but same stuff, roll over, up, sideways, downward shakeout. And so as we look at this, it's the same story as to if it breaks below here, it's going down. And based on this sideways price action, and a common question would be, well, Greg, if it breaks there, what about this low over here? Well, sure. I mean, that's definitely something that has to be considered. It would be a stopping point. But my interpretation as I look at, you know, any chart, and I see all of this price action up here where it's being halted from going up, but I see this downside shakeout. Well, what's keeping it up here? Well, buyers, right? And sellers are keep botting it on the head over here. So if the sellers win the battle, are the buyers going to step up aggressively here after they lost it here? Well, some will, because it's just, you know, a low. But, you know, looking at this pattern and bigger picture, this move down, this consolidation, which breaking below here with 2020 hindsight would say, well, you know, sellers had control, so on and so forth. And the green bar, you know, that reversal just resulted in some sideways price action that just couldn't break out. Well, then it's probably going to go through that. That's an assumption. And with that assumption, if it actually begins to happen, we're going to look for it to come all the way down here, because now we're going to have the weekly chart breaking lower. So you definitely want to have an alert here, no matter what you're trading, because if this starts going down through there, and you do the same on the S&P and the Qs at their respective levels, you want to know where those levels are at. Even if you don't trade Qs, you don't trade the E-minis, right? And you're trading XYZ and the market starts to fall, you're not paying attention possibly. Some people think, I don't care what the market's doing because here's this wonderful stock and it just goes up. It doesn't give a darn about the market. Sure, I got it. But if you have the broader markets all starting to sink in unison, you know, odds are that wonderful stock, the buyers are just going to step back for a little while. Russell, same mess. So far, just inside day of yesterday's whipsaw, tail on the top, tail on the bottom, ended the day pretty much where it started the day, and a little bit of a positive thing, hourly downtrend. Same thing going on all over. Bonds, right? Sideways. I don't know what's going on either. Oil stalled here, right? So that we do have these pretty nice moves if you know how to read the combination of support, support, bottoming tail there on the hourly, and your smaller time frames, and look at the candlestick patterns on the smaller time frames. You can day trade even against the trend. Right? Well, that trend's down, that trend's up, it's stalled, right? And so on. So this is really what all of you that are in front of your screens intraday need to learn how to read multiple time frames. And if you learn how to read multiple time frames together, well, as a day trader, you can pretty much find trades every day, but you need to limit your focus. Otherwise, you're all over the place and you're going to miss a lot of stuff. Right? All right. Gold, interesting. Right? It's had a nice move. It's broken out. Should keep going higher, but getting sold pretty aggressively here this morning. Big wide range bar down, and silver, which underperformed, really taking a bit of a shellacking here. So I would assume I don't have the news on, but something got this going lower pretty aggressively there. Yeah, especially after, a decent green day, and it took out the high, and now the selling, and it just leads to the same analysis or thoughts of there's so much uncertainty out there about what's going on. So we get this mess of big green bars being ignored, and then it starts down and it comes back up again, and red bars being ignored, and so on and so forth. So it's a beehive of a mess that's going on, and you trade a little smaller, sit there on your hands until something looks good. Like this doesn't look so good as a counter trend play, and I'd like to see a little bit more backing and filling here versus what were we looking at? Was it? It wasn't gold. It was right. There's a nice pattern. Right. So, those of you watching here, if you get a screen capture or whatever, and you just grab my screen and say, hey, this is what I should be looking for as counter trend trades, is that, look, this was in a downtrend, but it came down to a bottoming tail bar where, to see this support. And now I go and look at my 15 or my 5-minute chart, and I see bottoming tails or red bars ignored. It's going to bounce. It's pretty simple. Sometimes it takes the difficult part is sitting there waiting for it to happen. All right, we looked at silver and the transports. I see some of them getting a little beat up here. This is just a mess. All right, so that's just really the takeaway. No matter where we look in different markets, that things are just a mess. And we usually don't cover currencies, but there's indecision there. That's the euro futures. We don't do forex here. If you're going to trade currencies, the futures are a much better market to trade than forex if you want to trade currencies. Yen, kind of messy, wide bars there. Canadian dollar, right? Nasty down. That looks like should be the next wave down under that green bar. British pound, downtrend. Come here, sought support, needs a little time. Good bottoming, topping tail bar with the location of that daily chart. So it doesn't matter what we trade. The analysis is the same, right? So Australian dollar looks trying to bottom here within an uptrend. So you got it. We'll see what today brings. We'll see what news might get things moving. Why do we make it so complicated? Stephen is asking. I can tell you why, Steve. Because you didn't come here in the first place. You went out onto the great internet and you got involved with the indicator mythology people and the Ichikumi clouds, and they twisted your brain. So that's why you make it so complicated. I know, you're right. There's a lot of people that don't know about Dan and I until, like you're saying, 6 months ago. And those that come and they first come to MT Live and or a webinar that we're doing. And, so I'll do a presentation next month at this Wealth 365 thing where they're going to have 60 speakers. And out of those 60 speakers, probably 55 of them will have some BS crap proprietary indicator or Elliott wave or Fibonacci's or who knows what to sell. And then Greg Capra comes on there and says, you don't need any of that stuff. And I'm like, well, who the hell is this guy? Why should I listen to him? 55 other guys told me that I needed these indicators. So, several months later, they start thinking to themselves, hey, that indicator didn't work. That indicator didn't work. I don't know. Maybe that Capra guy had something useful to say. Let me go check that out. So, yes, it doesn't have to be so complicated. Those other presenters cringe. They probably all ask, don't put me on around that Capra guy because he's a nut job. Anyway, that's enough of that. All yours, Dan.
You're leaving your presentation on that note that this guy's a crazy nut? Alrighty, so McGraw, you gave me this McDonald's call spread idea, so I just posted that. Let's look at opens like usual. Weekly options, ACB. I got us into some put spreads and legged into a covered call on this wide range igniting. Had a bearish close with a topping tail, but as long as it holds support, we'll make money through time decay. APT, we sold a put spread and went core long. ATVI, we have a put spread and we closed half and tightened the stop on half. Beyond, we did a call spread yesterday. And some of you were asking if it got filled, and then on that bounce into the close, it did. I had three people email me that they did get filled at 60 cents. And it's gapping down, so that's obviously good for us. Facebook, we have a put spread for next week. Kroger, call spread Friday. Uber, call spread Friday. And finally, XBI, put spread Friday, and we covered half. That looks great. Wow, we have a ton of open positions here in the swing letter. So I'm going to do them really quick. Well, you missed it if you don't see it. Telegram, it's there. It's weekly options trader, so you got to be a subscriber to weekly. But this is what I posted. All right, let me go really quick and just ask me a question if you have any. So ACB, APT, we have in this letter too. Azul was a nice little airline reversal. Airline's getting hit again today. This and Gall. Jason in our room mentioned these two. These were the only two airlines that I liked yesterday. Everything else was, here's the ETF. Jets is still a mess. You see our major airlines gapping down again here. Look at AAL, looks like a day trade short. That's a beautiful bearish gap. Let's put that right here. And SIBO I posted as a short to our swing letter. That's a beautiful pattern, look at that. Downtrend, bearish retracement, bearish gap, bearish, gapping down just under it, price void on the daily. That looks great. Delta, day trade also. Yeah, these airlines don't look good. Cruise ships also are weak. All right, back to the opens real quick. BBY. We had a beautiful entry yesterday right here in the morning pullback to support. We legged into a covered call to lower the cost basis. Cato, short stock. Gold, put spread. H, a bear put debit spread. The hotels are also weak. Here, we sold a naked put. We don't mind taking assignment. Olex, long stock. I see one print up there around 56 bucks. If it is, then we'll probably sell a little in strength. J&J, we're short stock. MYOV, long stock. Beautiful, beautiful gap breakout trade yesterday from this bullish rectangle. Just textbook. Wide range igniting. It's not a flag, but it's a rectangle. And so you just, you got to hit the button. Nikola, we have a out of the money put spread. We covered half at amazing gains. PSXP, we're short stock. Southern, triggered yesterday, the bear 123. TXG, long stock, legged into a covered call. Visto, long stock, looks fantastic. WST, long stock. I was going to leg us into a covered call, but they don't have weeklies and the spreads were too wide. And finally, Zingo, we're in trail mode. So that's everything. Everything looks fine. We got of all those open positions. They're all great. We have no problems to deal with. Look at this little workhorse. And that's no pun intended, huh, McGraw? This guy has been a workhorse. Gapping up, nothing to do. Actually, in today's MT Live, we're going to be talking about how to trade these explosive patterns and momentum moves and so forth. And I actually have a slide on workhorse. NTs has been a beast, another nice gap breakout. And I'm sure somebody told me in the room, but I missed it. This would have been a no-brainer 1, 2, 3 long yesterday. Look at that bullish gap breakout, wide range, no pullback, no pullback. And that's a textbook 1, 2, 3. Well, textbook is out of a consolidation, but I'm saying we're using this as our intraday entry. That was a tier 1 gap trade yesterday. I missed it. Piton here, stay at home stock, has been on a tear, but no pattern. Actually, I gave this as a put spread in the weekend letter, and we didn't get the credit we wanted. Hey, Ed, that's an excellent question because we typically do wait, but in the McDonald's case, it's gapping down, and I gave a limit entry, so we're probably only going to get filled on a little bounce. So no, so this is an exception. So good question. This is an exception saying, no, I want it with my limit. Plug was also a bullish gap yesterday that had a beautiful pre-market. And then right out of the gate, it took off. Some people in the green room were trading. Yeah, the reason is I just said it. I want in the trade. I just said I'm only going to get filled because it closed at 78, so I want 70 of that. So I'm only going to get filled. So the only reason I wouldn't want it is if I had a big old igniting bar. Then I'd say, uh-oh. So in that case, I have it in another window. In that case, then I'll send out an alert saying, whoa, let's wait a few minutes. Let's continue here. Another little rocket ship, CTIB. I'm not sure what they do. Big old gap. No, there's no trade there for us. AVAV, I think Alex mentioned this. I like the gap up from this. No, Mark, you got to read. You got to read, buddy. F. So this one is negating this, and it's a retest pattern, and it's gapping up. So that, well, its gap's too big. No, F slide is under yesterday's low. So yeah, it might be 5-minute low because it's gapping under it. Yes. Gotta read. So waiting 5 minutes is see that these are a little different because we're only going to get filled on a bounce. Whereas the rule, when we are shorting stock and it gaps under it, we say wait for a 5-minute low. But just here, let me use this as an example. BBY. BBY yesterday, I said buy over the high, right? But it gapped up and it didn't take out the 5-minute high. But then, you know, did I really want to buy a 5-minute high with that big gap? But look, it gave us a beautiful buy setup on the support and a potent reversal. So that's where we got into it. So now on F-SLY, we have to decide. I have the quotes, you know, I got toss open in 2 computers, so I can leave it. I got one open so I can see what the midpoint's going to be. We might be more aggressive on this one because I love the pattern. Remember we were watching it yesterday? We were watching it. And then I said, well, glad we held off because it rallied. But when you think you're close, you got to keep watching these things because look, even though it made a new high in the morning, it came all the way back and closed at the low. So what, I mean, this just should be second nature to you all now. What is the daily chart going to look like? You know, if I this would actually be the type of quiz that I would give to when I would teach class in person. I'd give them this chart right here. And I would say, draw me what the daily chart looks like, just using this data, knowing nothing else. And you would say, wow, you know, look at this power move here, started at roughly 47 bucks. And in a week, it went up to 80 and change. So I know the daily's extended. That's a no-brainer, right? And now what I just said, here's another power move. So it's getting more extended. You know what? So what do you think this would be on the daily? This is actually a great test right now. If you're analyzing these bars, right? So you have to look at the open and closes, and you have to draw a daily bar. This is actually a fantastic exercise. So this would be a wide range igniting, right? Because see that the 20 MA was flat, right? So that's a wide range igniting with little to no tails. Opened here, closed at the high. This one here, gapped up a little bit. And now this is like a wide range ending. There's my topping toe. All right, so let's watch it now. All right, so I'm watching McDonald's. It's just, you know, bobbling around doing nothing. Ah, see my bottom right here, American. See, so the only reason I would not want to get into McDonald's if it had a big power bar like this. So although I was really hoping AAL would turn into a beautiful day trade short, I don't know anymore. I don't know. I need more information. All right, so on F-SLY,